Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, February the 16th, 2022. Interesting market again today. During the European session of Globex, very strong rally took place, and we saw the market head up towards the 200, the hourly 200 moving average. And then once it did reach its overnight high, above 14,549, the market then just kind of traded sideways. We did get some decent moves during our own session, both to the upside and the downside, but basically the market was range bound right until the end of the day. And then they made a stronger push to above that 200 moving average on the hourly chart, and then it brought it back down. Now, I can speak to this relief rally, and that came on the heels of a report that Russia was withdrawing troops from the border with Ukraine. And of course, that was just, oh, relief, we're not going to go to war. And so the European markets went up and they purchased, and so we went up with them. But I continue to feel that while a possible incursion into the Ukraine, or the possible trying to take over the Ukraine by military force by Russia, is a very serious doing, a very serious thing in terms of what it will disrupt within the global economies, within global commerce, within the ebb and flow of all sorts of different products between Russia and Western Europe, and between us and all different countries. So yes, I get the relief part of that, but I want to add that continuing to hang over our markets, again, is the fact that they may be withdrawing some troops from the border, but they've not come to any agreement where everybody's just going home for the weekend. You know, everybody's going to say, okay, that's all done. We're not going to invade the Ukraine. Russia's not withdrawing its 100,000 plus troops and military equipment. NATO's not withdrawing its forces from the other borders and pulling them back. The US is not stating anything to the likes that we've come to an agreement with Russia diplomatically, and so all things are being settled. None of that has taken place, but yet the market is going to hold higher. Now, I have been discussing, so trust me, with warranted questions, that came about today. It's like, well, how does that affect your count? Aren't we not a little bit too high for a fourth wave? And to be honest, I had to say, well, didn't break any rules. So in that respect, no. But I will add, and this is an important part, as you study Elliott, or if you already do study Elliott, then you have an understanding that one of the things that R.N. Elliott himself wrote about, Hamilton Bolton wrote about, Robert Prechter wrote about, is that when you're doing Elliott wave, part of what you're doing as you're counting is the look and feel. If it does not look right, if it does not fit with what's going on, then likely you need to make a switch. And in this case, what I was trying to count right here was a fourth wave. Now, this would have been, if we just take a look at these numbers, 382 would have been about the best I could have expected from a fourth wave. And it exceeded it by far. In fact, it exceeded 50% today. And then just the look in comparison to this is a fourth wave, this was a fourth wave, this in comparison to this, retracing 50% of the entire move? No. So as I have discussed previously, that I was looking at the possibility, again, being that we're in an intermediate C wave down, and that consists of 5 waves of minor degree, of which we just did 1 and 2, that if I was counting this on a minute level, and this was minute 3, and this was minute 4, it's like, wow, that doesn't leave very much room to make this third wave the longest and the strongest. So I was discussing the possibility and the probability, if this kept going, that this would end up being minute wave 1 and not minute wave 3, but minute wave 1. And I've changed that and I've labeled the internal waves accordingly. So we do have 5 waves down, and that this then completes minute wave 1. Then this becomes minute wave 2. As a second wave, it fits much cleaner. The structure is still the same. It's an ABC, finishing up that C wave up here. We do get the opportunity to allow additional room under guidelines written by Elliott. Second waves can retrace almost all of wave 2 as the market perceives downside. In this particular case, downside is over. Return to bullish positions. Now, whether that is true or not is yet to be seen. So wave 2 can also be a bit deceiving. So when we take a look at the entire structure of what is going on, in fact, I'll just take this up to the 4 hours so that we can see that. It just puts things into perspective. That would be saying that this is all done and that this is the start of a new bull market. And it just does not fit for me. And I've heard different folks on how they're counting this particular move. And if this is the particular move that they're counting on, then this would have to be 1, 2, and this would be a 3, and then again, this would be a 4. Does not fit. What could possibly fit, and I'll tell you, which would then allow for an additional new high above 15,246, would be that this is ABC, only A of that intermediate B wave. And this is ABC, and this would be B of that intermediate B wave. And what we're starting now is a 5-wave advance in the form of a C wave of that intermediate B wave. Now, if that's the case, then yes, I'm looking for this to get way up here. So that is a possibility, and I'll leave that out there. That's not that will remain over in alternate view status right now, but it's out there and it is possible. But right now, this is just stronger, and the pressure that remains over us with interest rates, with inflation, that's real. That has not been resolved. That has not been taken care of. There's thoughts on how, but the Fed has not reported anything on their emergency meeting last night. And by the way, if someone has read something on that meeting, that's something that's come out from the Fed, please put it in the comment section here on YouTube so that I can check it out and then bring it back into what our picture is telling us. Because I've not seen anything yet. So we still have that. We still have strong potential of a 0.5 point rise in March and working its way up to a 4 point rise by June. So yes, that's spacing it out. But to consider that this rally is, and you may hear folks saying, oh, interest rate rises, they've all been baked into the market. I'm like, really? So that would suggest that inflation has been dealt with. Inflation is now going to decline and not continue to rise. That to me would mean that we're baking in interest rate rises into our market that are going to take care of inflation. And I'm sorry, but that just in my estimation has not taken place, nor do I think it's going to by 1/4 point or even a 0.5 point rise in the interest rates. It takes time to deal with inflation. It has to filter through a lot of different areas before it all comes back down. So it's here, it's going to be with us for a while. And then what we need to deal with is how we want to react and what really is going to be the correct move. Now, indeed, if I'm counting this as the completion point or close to the completion point of a minute wave 2, What's up next is wave 3, minute 3 of minor 3. Big move. Now, again, I was trying to count this as a third wave. Yes, it works out, and you can see the strength of a third wave, but it was on the sub-minute level. Now I'm moving it up 2 degrees, a minute degree on top of a third, a minor degree. So that we should be seeing a turn, a quick beginning in terms of the decline, and then we start breaking back below our moving averages. We start breaking below cleanly now, just getting rid of that 200 and leaving it above, breaking below the 4, the 8, the 20, and the 50. That should happen very quickly. And that only just takes us from this level, only takes us below 14,400. Then we're going to start breaking below 275. Then we're going to break below 483 and 431, which is the current low for wave 1. Wave 3 should easily take out the low of wave 1. From this level, easily take out that low at 14,031. And as we have laid out previously, what are we looking for? We have support coming off 13,721, 13,360, 13,093, 12,844. And where could it possibly end? 12,188. Now that's over the next, I would say, maybe 3-4 weeks. But it should be very steady, and it should be pretty hard to the downside. Reality, I believe, will sit in. And when that occurs, whether or not we get that Russian invasion of the Ukraine or not, inflation is a real problem in our country, and it will choke off many things in our near-term future. Higher interest rates will choke off a lot. They're going to choke off home sales. They're going to choke off new car sales. They're going to, borrowing money will not be as good of a deal. It will cost a lot to be borrowing money when you're starting to pay 5, 6, 7% for a 30-year mortgage. It just prices many people right out of the market. When you're paying, between 5 and 10% for a new car, interest to pay for that car, the term, first of all, will be shortened. There won't be, this cheap money that you're going to extend out to 5 or 6 years. So a lot of changes are very possible. And when that starts to happen, many things get choked off. That has not anywhere near been reflected in our market. So I think that there's a lot of just dealing with the reality type of a situation that we got going on. The relief rally, sure, okay, I'll go with that. But I just think it was a little bit unfounded. That I think that, yes, it is a relief that the possibility of going to war has been lessened some, but I think that just puts the focus back on our other problems, which have not been resolved. And in fact, the Ukraine situation is not resolved just yet. So anyway, for tomorrow, I think that, yes, we still have the possibility that we can get up to, again, that hourly 200, which sits at 14,583 right now, 582, excuse me. And then, hold on, excuse me, we've already gotten above it. We got above it pretty cleanly today. We closed right at it. I do think we have a little bit more power that we can get up to the 618 level, which is 14,671. So it's another 90 points, 100 points from current levels. And then we do have an additional resistance of 14,761. Now, what this move cannot do, as a wave 2, it can't go up and break above 15,066, 67, 68. Cannot break above it. If it breaks above it, it's not a wave 2. Then we're back to that other situation where I just talked about, that we have the possibility that wave B is still in place, still in progress. And then we're doing a C wave up. And in that case, we do have these much higher levels. One day at a time. Right now, under the current count, I'd be looking for it to top and to turn. Again, look and feel are important. So if it's going to turn and it's going to start to drop, and it drops quickly, that's going to give support. that this wave 2 is done and that third wave has begun. What sits behind it, I don't care. I just want to see it. If it's happening, then I know we're heading lower. Breaking below the moving averages will give support, and breaking below the 20 and the 50 would give more support to sellers moving in, and we're going to see some acceleration. As you start to break higher support levels, we'll see acceleration lower. Okay, I'm going to end it there. Trade smart. Use the moving averages, use the Elliott, use the Fibonacci. And our next update will be on Wednesday the 16th.